Hey guys, just want to come back with another video. I want to make more videos. Keep them a little short, focus on specific patterns. This video is about a sharp pattern that happens in the morning called a 9 a.m. pop. And essentially the idea behind this is that a stock pops right before market open, right? Market opens at 9:30. Stock usually pops somewhere between 9 and 9:30. Sometimes it pops at 9:20, 9:15. 9 a.m. is common because that's a good time to put out a bullshit PR, right? That pops a stock right before market opens, kind of gets people interested in, they're people are looking at their scanners, they're waiting to see what's up, and suddenly right before market opens, something pops, 20, 30, 40%, and people start looking at it, right? Okay. So, and we all know that in the pre-market's very thin. It's very easy to abuse liquidity in the pre-market, drive stock up. Um, so, the idea behind this pattern is that a stock is popped up right before the pre-market to dump into market open volume because they know if they make it seem really strong going into the market open, that people will trade it, right? People expect some type of breakout, some type of push, especially on these lower float stocks, a lot of which have been previous runners, right? Like NURO here, this is on November 3rd, 2022. We go back, we have this day here, we have this day here, we have this day here. Previous runner, right? But in reality, it's pretty much somebody who's abusing backside short liquidity, so people who are shorting this on the way down, right? So they're popping it up in the pre-market, hopefully to get them to cover since they see it going up, and also just people think it's going to run again, right? So the idea behind this pattern is very simple, right? Market opens, it gives some type of weak pattern, immediately starts fading, okay? And a lot of times, these will fade almost like dilution fades. Like this almost looks like an ATM fade. Actually, it looks exactly like an ATM, but this is exactly how ATMs fade. However, you don't even need dilution for this to happen. There's no dilution in this. This is just somebody dumping their stock, a previous bag holder, or somebody who just wants to abuse some liquidity. And they could just go straight down. And even though this is up, this went from 1.6 to 2.08, you might think that's only 30%. There's not enough meat on this to be a meaningful trade. Why would I trade this? A lot of these trades, go back to where they came from, and as you see over here, they start going red. They start, look at this. This close at 135, open at 1.6. This is like a 35% fade, like from here to here. So very simple. Whenever I see something pop, especially these previous bags, as you see here, nice to have, previous runner with bags. Sometimes you get the holy grail, which is like a 9 a.m. pop, and you get dilution. So especially a recent ATM, something that's less than 6 months old, especially less than 3 months old, revised pre-funded warrants, pre-market distribution. We'll see some other charts that have this. Just essentially when it pops at 9 and it's already starting to fade into the open. All good stuff. This is a very high odds pattern. A lot of times on tickers that people aren't really looking at, and they could just go straight. You'll see so many charts, they'll just go straight down. So yeah, anytime you see a little something pop, 9, 9:15, 9:20, sometimes even 9:25, 9:28, it's actually very weak. It's actually quite weak. So Neuro. I should go over best criteria over here. Sub 3. These tend to be lower price tickers, right? You don't get too many of these that are over, I would say, $5 or $6. A lot of them are sub 3, especially sub 2. You'll see a lot of stocks that are like 1.5, 1.6, 1.7. Very common. Weak market open volume. One of the most important things is whenever you're looking at a stock that's gapped up in the pre-market, and this goes for any pattern of any situation, is you always want to pay attention to what the market open volume is, right? We're in a weak market now, and liquidity is draining from the microcap market due to various macro factors and other things. So you're getting a lot of these stocks that open at market open are trading. Look at this, like 570K. This is on a $2 ticker. 428K, and then the clear out move, which I shorted at literally when it broke, that was the 1 million share candle, and then usually after it gives its initial weak move and goes under VWAP, the volume just drains, and then it just goes straight down. It just goes straight down. Um, so a lot of these don't give high day clearouts. This is just like a perfect situation because they literally popped it at 921 right before market opened. So high day clearout made sense because it opened right under it. A lot of times it pops at like 915, shows distribution, and in those situations it's very rare for it to hit high day. And you got to look for other entries, which we'll talk about, right? Also, best criteria, no high IO. It's usually a low float, low institutional ownership previous runner that is looking to fade. And actually, believe it or not, if the market's weak enough, you can have a 2 million, 3 million float stock, and it'll give the exact same pattern as this. A lot of times they're a little thicker. It'll be like 5 million, 7 million float. But we'll see a few examples of 1 million float stocks giving a very similar pattern to this that produce big fades, especially in a weak market, produce big fades. So yeah, weak market cycle is under my nice to have. Weak market cycle, of course, is always good for shorting because it's weak. Things are unlikely to push. So it's helpful to know how much strength is in the market, how much liquidity is in the market, what type of moves are being made, that type of thing. So let's look at a few other examples. SPRC from the 7th of November, similar thing. Sub $2, right? Sub $2. Pops at 915, okay? Starts showing pre-market distribution, nice to have. Consistent higher lows. Market open volume. I don't like shorting right at market open, so I probably wouldn't have shorted this right away. At 158. Maybe it was a good chance to do it. I'm just not comfortable with doing it. But I actually shorted this on the bounce of the VWAP because I was expecting this just to go straight down. But it did come back up. But since this, which can happen, but when it comes back up, I'm paying attention to what levels could they be targeting. I was looking at 1.6. I thought maybe they would clear out this level. But then I'm also looking at the volume, right? I'm seeing these like sub 1 million share candles on a $1.6 stock, quite low. Rejects right at this top that market open happened, and then bounces up again on even lower volume, rejects that with a lower high. And a lot of times I would think this could be a trap. This could just be soaky, and then give the 1.6 clear out. But on this type of pattern, in a weak market with this weak volume, this is actually a good enough end. This is a time where shorting a lower high actually makes sense. Just given market cycles, given the pattern. A lot of times in shorting, you're just adding the bearish factors in your head, with market cycle being the most important factor. How much strength is in the market, how much liquidity is in the market. And then you're looking at other things. Like I know that stocks that pop at 9 a.m. are often just abusing liquidity for a dump, so that's a bearish factor. Pre-market distribution, that's a bearish factor. Low volume, that's a bearish factor. Kind of adding them up in my head and trying to look for a decent entry, right? And in really weak markets, and I mentioned this on my Twitter recently, that a lot of times it'll seem like a level's being painted, but if there's just not enough volume, it'll just roll over under that level. Like it looks like 1.59, 1.6. It could give a little clear out, then fade. But in reality, like in truly weak markets, it can't even reach clear out levels. Like a lot of times it'll stall at that level, and we've seen that a couple of times so far this month, where there's some clearly painted level where it gets touched, but it doesn't break it. And it might bounce very close to it, but then just gives a lower high and fades. And that's just weak market action sometimes. Sometimes you wait for the big clear out and it doesn't happen. Not enough money in the system. So yeah, a lot of these times, again, previous close was close to 1. Fades to the 1 minute 200, always a good initial profit taking level. If you're shorting up here, I would be looking for initial profits down here in case it starts. A lot of these could just bounce around and then literally go sideways the rest of the day. But especially on the 9 a.m. pops, they get really, really thin. They form some type of floor. In the case, this floor is at 1.17, and then eventually they crack the floor. Sometimes this cracks in the middle of the day. Sometimes it cracks at 3:30. But a lot of times it does crack, and yeah, it could be very, very bearish. Here we got another crack down here. This is at 1.06, 1.05, and then 1.03, and then this is red on the day. Like end of day, here's a final dump. going red on the day at exactly $1. Um, so again, a lot of people might think gapping percentage isn't that great. It's a $1.5 stock, blah blah blah. And listen, if you're doing size under, 300,000, $500,000, you know what I mean? If you're just like a normal trader who's not, who doesn't need a high price point with massive range, because there are people that get to that point where it's just not worth their time. But if you're doing, if you're looking at a $1.5 stock and you're looking to do, I don't know, 20, 30,000 shares, you could do that in this type of play. And it fades from your entry up here. Fades, that's a 50-cent fade. And that's a lot of money. It's very good odds, especially if you're starting out. So SPRC is a good example. Again, the pre-market distribution, the weak market open volume, the struggle to break clear levels. I thought it might just reject VWAP and go straight down. Gives a little bounce that happens sometimes. Look for another entry, that type of thing. Or just have wider risk. Just know that the odds of this pushing is quite low, especially given this bounce volume and this rejection and in the thinning liquidity on this, especially on the pushes, especially on these green candles. It's less likely to push in this situation. So LITM from September 30th. Again, same thing. Gives an initial pop at like 850, pulls back suddenly at 906. Gives us a nice. What I actually this is actually gonna be a nice pattern in very specific situations where it gives what I call a triple top. It gives one push, quick pullback, second push, quick pullback, third push. Third push is actually quite weak. If they're done in succession like this, very quick succession, could be quite weak. Shows pre-market distribution under $3, right? Pre-market distribution, right? Again, doesn't even need dilution. If there is dilution, it's great. LITM is also previous runner from this day, right? So common theme is previous runner that people might be interested in, but in reality, there's just tons of bags and it's a weak market, and this is just abusing pre-market liquidity. And then good entries. Right here, I have something called market open VWAP. So market open VWAP, in certain situations, usually situations where there's a lot of distribution going into market open, and then it opens relatively close to VWAP. It usually, like if it's opening all the way down here, I don't even expect it to push. I don't even expect it to be strong enough to push towards VWAP. But if it opens like right below it, if it's between this level and like this level, a market open VWAP push could be really high odds, and we'll see other examples of this. I guess you show you another example that's not a 9 a.m. pop, but it's an example of a good market open VWAP rejection that shows what I'm talking about. But yeah, look at market open. This is 400K shares per minute, very low, not high at all. It's just hanging out. I'd be looking, okay, I know VWAP's at 2.12. That's the level it's kind of being painted on these two candles. I'm looking, as soon as it breaks 2.12, I would be either put a limit order right above it, like literally 2.13, 2.14, or just market order short as soon as it breaks it to the upside. Just assume it's going to reject in this very specific situation. And yeah, that VWAP rejection is the biggest volume candle, and it's the same thing. Like, straight down to the 1 minute 200, and look, that's if you got in at 2.13, that's 1.8, and that's like your first profit target because this pattern's so bearish. That's more than 10%, and then you can a lot of times, again, it forms some type of floor, and then it gets really, really thin. It stays under VWAP. Usually, it pretty much has to stay under VWAP in this situation. And then it gives one more crack, hopefully a big one. So it kind of fucking around, comes up to VWAP, it's not there, rejects it, kind of fuck around, kind of fuck around, kind of fuck around. And end of day, pretty much comes back to where it was. So it actually didn't crack the floor, and it happens sometimes. In this situation, I would either take out a lot of my profits down here and just hold for a little bit because I know it can actually almost go red on the day. So I'm like, oh, maybe this goes sub 1.7, 1.65. And as long as it's under VWAP, I would just keep holding. And end of day, I would probably just cover somewhere over here. Like, okay, maybe you get really lucky at 359, it gives a big crack. Sometimes it happens, it gives a big crack. If it doesn't happen, you cover, and it just be like that sometimes. So here's a good example of not a 9 a.m. pop, but example of pre-market distribution. Do, 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 do. All right. So this was back in October when there was at least a little bit of strength in the market. An intraday parabolic, which we don't see that much anymore. I shorted this clear out, took profits down here, got back out, and I should have seen the lack of liquidity. I should have seen the pop. A lot of times you'll get these like stronger pops that look like they're about to break high day, but if you're in a weaker market and there's just not enough volume in the stock, they'll clear out some level and then turn back around and then fade. But that's not what I'm looking at. I'm looking at day 2. Again, this is sub $2 stock. It's a microcap piece of shit. Showing a lot of distribution into the pre-market. Volume not impressive in the pre-market at all. And yeah, I remember shorting this. So here's it opens up right below VWAP. I like to see a break of VWAP, but sometimes you don't get it. But it did form this like little like shelf, this little consolidated area right here. And then I was just waiting. I was like, okay, I'll just wait for 1.87 to break. Breaks on the next candle, massive rejection, and this is the pattern. It just breaks. This is high day clear out's a good entry. Market open VWAP's a good entry. And then it seemingly gives a good bounce, but I would just have my risk up here somewhere. And yeah, I mean, look at this. Look how big of a crack this gave. This got really thin, and then it just sold off, and that's a 1.8 entry and sold off to 1.4. And yeah, it just kind of chopped around the rest of the day. It actually came back up. But this was a good level. I would have probably probably would have held a little bit more, but I remember getting back out on the pop. But yeah, this is a great fade. So let's go to other example. Here's an example with dilution. This is when multiple bearish factors add up, and the more nice to haves that add up, the bigger the size you can go because of the more conviction, right? So here's Mott's beautiful range, 100% plus. I actually shorted this at 5. There was a huge bid that I shorted into, and it broke it, and it showed distribution. But I only did a partial up here. It wasn't full size. And then I shorted more at market open, actually, on these candles. So big pop, 9 a.m. This had a recent ATM. This had a ATM that was, I think, like 6 months old or something like that. Showed pre-market distribution, market open volume under 1 million, but not a $4 stock. But I saw the ATM and I saw the distribution and I saw the 9 a.m. pop. I'm like, okay, this is probably going to be really weak. Might give a really nice ATM fade. And the thing about ATM fades, you can actually hold whatever the close was. Like if it's 2.3, hold for like sub. I remember taking profits out on this crack at the 1 minute 200, but on really nice ATM fades, you could just hold for like 2.8, 2.6. You could just hold all the way to. I would hold most. Don't take partials anywhere in here. Like if you have a recent ATM and it gives a really nice distribution pattern and weak liquidity pattern like this, it'll go straight down. So yeah, and then it got really thin like all ATM fades do, and it just chopped around, and then yeah, it reached all the way to look at that end of day. A lot of times, like, and this is something I had to learn over time with ATM fades, even though they get really thin and you keep telling yourself, this is probably the bottom, a lot of times just AFK hold to like 345, 359, like, and then like you would be surprised how much they dump even more at the end of the day, and it ends up just, being a massive trade for you. So 9 a.m. pop, ATM, not super impressive. Market open volume, and yeah, dilution fades with this type of pattern. They don't get bounces. You don't have chances to bounce. It's going to feel like you're chasing. But yeah, rejected VWAP right at market open. I just saw it struggle, and I just assumed it wasn't going to keep pushing, and then you short it. So that's a good example. CLU. Do. So sometimes they are grinding up. Um, they are grinding up in the earlier pre-market, but then look at this, right at 9 a.m. some little bullshit pop comes in. You know what I mean? Like, and then again, this is like a sub $2 stock. And a lot of these, like, a lot of people are afraid to short these because they're taught that a lot of these stocks want to defend the $1 level, and you shouldn't short things close to $1 because somebody's going to come in and try to maintain bid compliance and all that. But on these patterns, a lot of these patterns are just like previous bag holding stocks, and trust me, man, these a lot of these stocks are going sub one, and they're either going to get delisted or they're going to reverse split. And this is a liquidity dump that could go well below $1. Well, especially with this type of pattern, when somebody is just abusing pre-market liquidity to dump as many shares as they can, trust me, like there's not going to be any $1 defenders for most of the time. It's going to be down only. It's going to be down only to where it can. And a lot of times they go red. A lot of times they go deep, and sometimes they go deep red. They go very deep red. So I remember shorting this push. I just shorted this candle. I saw it rejecting, and I was like, this is probably going straight down. And yeah, just so you know, just know when you get these sub $3, sub $2 stocks with these 9 a.m. pops, they can go. Even if the range is 25-30%, they can go red on the day. They could go very deep down because it's just a liquidity dump. Like, that's all it is. So what else? Let's look at some weird examples. BCAN. This is a microfloat marijuana stock or something. Here's the 9 a.m. volume. Insane pre-market distribution, right? Market open. It's trading 200,000 shares a minute. Granted, it is a $16 stock. Gives one tiny bounce, opens right below VWAP, pushes up the VWAP, rejects it, and gives a 70% fade. Goes straight down. Sadly, I didn't short this. I didn't want to pay for shares, but sometimes you have to recognize the opportunity. And I have a rule that I normally don't pay above 2% of whatever the share price is for my shares. But sometimes the opportunity is so massive and the pattern's so good that it makes sense to pay more. So then is there anything else? Here's an example of a 1 million float stock doing a variation of this pattern. SNAL, this is very recent, November 11th. By the way, in these videos, if you want to see what dates I'm using, it's this thing up here. Okay, these are the dates. I didn't say all the dates for all the tickers, so if you want to know what charts I'm looking at, look at the date up here. This is 2022, by the way. Okay, 1 million float stock. Crazy. Everyone thinks it's super bullish because it's 1 million float. But in weak markets, especially with weak patterns and weak market open volume, 1 million float stocks fade. It can fade actually really hard. Really. They could go up really easily, but they can also go down really easily because it's bag holders recycling their shares. And even if it's only trading very thinly, it just recycles straight down, and you could get just like nasty fades on 1 million, 2 million float stocks. So again, 9 a.m., 1 million floater just pops, right? In this case, it's above VWAP, but gives the first market open candle, rejects it, and a lot of times what will happen is a good entry is a pre-market range. So a lot of times I like to see what type of ranges it's set. Like there's a range down here, there's a range down here. I'll show you what I mean. I'll show you a non-9 a.m. pop of what I mean by pre-market range. Whoops. But it's usually a range that's below whatever the pre-market high is, but above whatever it opens at, right? So there's a range here, there's kind of a range here. So pushes, rejects, volume not impressive. Pushes again, rejects again, and then this is enough distribution and enough weakness that even on a 1 million float stock, I know with a 9 a.m. pop pattern in a weak market, this is a good enough entry. Sadly, I also didn't want to pay for shares on this, and again, I didn't want to pay like 12 cents a share, and it faded $1.30 for my entry. Like that's what I get for not wanting to pay for shares. But yeah, a variation of a 9 a.m. pop. Very weak, very, very weak. Okay, RNAS. The end of this video, I'll just show you what I mean by pre-market distribution or pre-market range. Okay. Again, this is weaker market, sub $2 stock, lots of pre-market distribution. This isn't a 9 a.m. pop, but this just goes to show you don't even need 9 a.m. pops for this type of weakness in a weak market to produce a big fade. So very clear range, right, in a pre-market. The range is this 1.52, and it's showing distribution, right? Lower highs, not super impressive pre-market volume, sub $2 stock. Previous runner, a lot of bearish factors adding up. And yeah, clears out the range, rejects, pushes again, rejects again. So he got two big rejections of this range. And I just know, yeah, I mean, a lot of times people, there's a lot of people that, they'll see the pre-market price action and they're like, okay, there's a range in the pre-market, I'll buy the breakout over that range. In this case, it opened up above VWAP, so you can't use the market open VWAP entry, and it's also too high from high day. If this pattern's really going to work, it won't reach high day. Especially in a weak market, it's not going to reach this, right? So you got to look at other levels that people would want to chase to go long, and you want to see rejections of those levels, right? So rejects it, just chopping around, and then, in case you missed your first entry, bounces off the 1 minute 200, paints 1.49, breaks 1.5, your $0.50 level that a lot of people like to buy into. Huge rejection, and when this happens, again, this could go back exactly to where it came from, even without dilution. So yeah, and then it just fades, and it just fades, and it just fades. And it goes straight down to where it came from, because that's how this pattern works. Yeah, you might think this is only up 40%, it's a sub $2 stock, but that's a big range. This is straight down. This is, you're not trading some manipulated stock where you're constantly analyzing a million different things. You got to know all these complex manipulation patterns, and you know what I mean. And you have to know how to read level 2 and tape and all this stuff. And these are the easier ones. These are good patterns to know. So, is there anything else? Harder entries. Yeah. Sometimes you don't get any of these, and you have to be a little more dynamic. This is something a little more advanced. I kind of don't recommend these if you're just learning this pattern. I'd recommend just focusing on these ones. A little easier to understand, right? Short into high day clear out, short into VWAP, short into some range in a pre-market that's been set. If neither of these work, right? Moving average continuation. This isn't a 9 a.m. pop, but I'll show you an example of what I mean. Not this. Maybe this. 10.5. Yeah. Okay. Super heavy pre-market distribution. Very weak market open volume, especially for this price point. 200K shares is not a lot. But outside of this one pop, very, I like to use the 3-minute or the 5-minute. I like to see the 5-minute push in the after hours in the early pre-market. It kind of gives me an idea of what moving average they might be looking to use. I like to see the rejections here. A few pops that immediately get rejected under the 5-minute 9 and 5-minute 20. In this case, it just follows the 5-minute 9, just rejects straight into it, and which is also represented by the 1-minute 50 EMA. Rejects straight into it, and when liquidity's this weak, it won't even break this range. Here's a little range that was set, right? VWAP's all the way up here, too far away. Very unlikely to reach this high. If this pattern's going to work. 1.5 seems like an obvious area, but when the volume's trading 200,000 shares a minute. It's not likely to reach it. A lot, analyzing market open volume is very important. Yeah, just rejects the 1 minute 50, 5 minute 9, and straight down. I don't know how the pattern works. Level 2 confirmation. This is where recording your screen helps. The only way to learn level 2 and tape reading patterns is to record your screen and watch a bunch of tape. And then even then, you have to kind of know what you're looking for. So in and of itself, it's not easy. Again, QH, I shorted this and made a good amount on it. Pre-market distribution, sub $3 stock, previous runner, weak market open volume, piece of crap. I actually thought maybe this will push to VWAP because it was relatively close enough. Didn't even get it. What happened instead, and I missed my entry because I was too biased on the push to VWAP that I didn't recognize that the distribution. Like, look at all these soaks. Soak, rejection, soak, rejection, soak, rejection. Just like all these like constant rejections, like very clean lower highs. With the weak market open volume, this is a single share print. It didn't actually go down this low. Somebody market ordered and had major slippage. That's why this wick exists. Anyway, level 2 confirmation. Rejected into these declining moving averages. Couldn't even hit VWAP. And then at 2.10, there was like a $20,000 share bid, which was the biggest bid and ask by far. It was a huge number compared to everything else. And I should have known that a lot of times when there's a big bid, it's just to manipulate the stock to generate buying liquidity to push us up farther. But in reality, if that bid gets taken out or if they pull it, either one, it actually doesn't matter. In this situation, that bid getting taken out is super bearish. And I saw it. Whenever I see a big bid like that start to get taken out, I will take out the rest of it. I will short my shares directly into that and try to take out as much as possible. In this case, I didn't do it. I didn't recognize. I was too biased. It pulled back. It bounced up above $2, and when it rejected $2, somebody put 45,000 shares on the ask at 2, and it was at 1.99 and 2, and I shorted into 1.99 and 1.98. Because I'm like, oh, a lot of times when people stack the ask really, really thick like that, on a manipulated stock with a more manipulated, stronger pattern, it's actually quite bullish. Somebody's just trying to temporarily push the stock down before they push it up higher. But in a weak market with massive distribution where it fits all these criteria, it's actually a legit signal to enter in your short. So there's a lot of games on level 2. There's a lot of games on the tape. And sometimes they mean things. And sometimes they mean other things, and it comes down to your understanding of the situation that determines whether you listen to that signal or not, and how meaningful it is. And anyway, it broke support and went straight down. And yeah, I mean, again, I actually covered at 1.66, and I'm like, oh man, I'm a genius. I shorted at 1.99 and I covered at 1.66. That was a nice fade. And if you look at this, it actually seems like, compared to where it started, like, this is a great exit. Like, look, it started here, and I got out here. And I'm like, oh, I did great. That was a good trade. Let's look at what happens. It breaks it here. And I was like, okay, it went down a little bit lower, but I still did good. I still did good. My analysis was still pretty fine. And then and then another 25 cents straight down. And this is often what happens on these huge distribution weak stocks. They give an initial big leg down. They consolidate, usually under the 1 minute 2, especially if it stays under the 1 minute 200, but especially under VWAP. And then it forms a floor, very thin, like this is trading like 1,000 shares a minute. And then they give sometime in the afternoon. Sometimes it's at noon. Sometimes it's at 1, 2, 3, 350, 359. Because another fat leg down, and that's if you understand the situation, you can cover some down here. Hold however much you want. Like, it's up to you. Probably at least half, and then wait for some type of floor to form. Wait for the volume to get really thin, and just have your alerts set, and then just hope it cracks. And if it does, cover. Anyways, hope all that helps. Long video. Here's kind of everything you need to know about it. It's essentially one big liquidity trap. This is what I would call the easy morning shorts. Just a lot of people pass them up because of a lot of times they have lower range, 25, 30, 40%. A lot of times they're sub $2, things people don't like to short. And yeah, they can give dilution fades without dilution. So hope that helps. Longer video than I thought I was gonna make, but but I think I covered a lot of good information here. So yeah, enjoy it.